If you've ever felt like investing is just way too complicated, you are in the right place. We are going to break down a really simple but powerful blueprint for putting your money to work. It's designed to be crystal clear and honestly effective from the very first dollar you invest.
Okay, let's just start with a tough but really important truth. So many of us jump into investing with a lot more hope than, actual strategy. And unfortunately, that can lead to some pretty costly mistakes. It's a super common pitfall, so you're not alone.
And that is the core question we are tackling today. Look, this is not some get-rich-quick thing. It's about a thoughtful, intelligent plan for how to put that first $1,000 to work. So, let's dive in and see how we do it. Here it is, the entire strategy in one simple visual. As you can see, it's a balanced approach, split into 4 key areas. We've got a piece for safety, to protect you, a bigger chunk for long-term growth, a calculated slice for risk, and, what I think is a crucial part, for developing your own skills. Let's break down each one. Every strong house needs a solid foundation, right? Well, your portfolio is no different. That's why the first 2 parts of our plan are all about creating a rock-solid base of safety and long-term growth.
So let's start with the first $200. Now, this isn't about chasing huge returns, it's about something way more important.
We're calling this your safety buffer. And here's the key. This money isn't even going into the market. Nope. Instead, you're going to keep it somewhere super safe and easy to get to, like a high-yield savings account. The thinking here is actually fascinating. This isn't just a financial buffer, it's an emotional one. Seriously, this is the cash that stops you from making a panicked decision, like selling all your investments when the market dips just because your car needs a new transmission. It keeps you calm. All right, with our safety net firmly in place, let's move on to the biggest piece of our $1,000 pie. This is where we start building real wealth for the long haul. This $400 is all about long-term growth. And the strategy here is simple. Invest it in low-cost U.S. index funds. This is the classic patient, set-it-and-forget-it approach to investing. So why index funds? Well, it really boils down to 3 simple, powerful reasons. First, you're spreading your risk across hundreds of different companies, so you're not just betting the farm on one. Second, the fees are super low, which means more of your money stays invested and working for you. And third, history. The data just shows that patient investors who stick with them are rewarded time and time again. Okay, our foundation is set. Let's talk about the other half of the plan. This is where we start looking toward the future by taking on some calculated risk and, so importantly, investing directly in ourselves. The next $300, this is dedicated to an area that gets a ton of attention and, let's be honest, comes with a lot of debate. We're calling this calculated risk, and we're allocating it to crypto. Now, I really want to stress that word calculated. This is not a random gamble. It's a deliberate, small, long-term position in an area that has high growth potential, but also high risk. And this quote, it really gets to the heart of the dilemma for investors today, doesn't it? Yes, crypto is volatile, for sure. But the flip side is that completely ignoring it might mean missing out on a huge technological and financial shift. So this small allocation is a nod to that future potential. And now, for the final $100 of our plan. This part might just surprise you. I think it's maybe the most important part of the whole thing. It's for self-investment. That's right, spending it on books, online courses, or workshops to improve your own skills and your own financial literacy. And this right here might be the most powerful takeaway from this entire blueprint. The greatest returns you will ever see won't come from some hot stock tip. They come from you. Learning how money actually works increases the value of every single dollar you earn for the rest of your life. It is the ultimate force multiplier. So let's pull all these threads together. Because this isn't just a list of where to put your money, it's a complete mindset for how to approach your finances with real intelligence and intention. So here it is, one last time, all laid out. $200 for safety to keep your emotions in check, $400 in low-cost stocks for patient, long-term growth, $300 in crypto as a calculated bet on what the future might hold, and $100 invested in you for what could be the absolute best return of all. And that's the real secret, isn't it? Smart investing isn't about the thrill of checking your phone every 5 minutes. It's about having a boring, consistent, disciplined plan that you actually stick with. It's all about the process, not the hype. And that brings us to the final and really the most important question. This blueprint, it's a template, a starting point. So how can you adapt these core ideas, safety, growth, risk, and skills to fit your own life? What does a smarter plan look like for you? And of course, just a reminder that this content is for educational purposes only. It is not financial advice, and you should always do your own research. If you found this blueprint helpful, make sure to subscribe to Green Money Chip for more clear, smart strategies just like this one. We'll see you in the next explainer.